All right, welcome everybody to Tax 101. We're going to be shifting gears. We have more than a full house here. We are overflowing today, so we are going to go ahead and utilize the chat. So everybody's going to be muted. This is going to be really, really engaging, really awesome conversation. Something really nobody likes to talk about, but we all know we have to talk about, which is taxes. And I'm super excited. We're doing something different today. I have brought on 3 panelists with me today, 3 experts who are in the tax world or have been in the tax world. And some have even had party rental business experience and then now have become accountants. Others used to be accountants and now they're in the party rental business. And then we have the guy in the suit who's just an accountant. He's like, I don't want to touch any vinyls. He's a smart one. So with that, because we don't have a lot of time, I'm not going to do introductions. We're going to start with questions right away. And when the panelist answers the very first question, they'll do a quick introduction. And before anything else, full disclosure statement. This is not accounting advice or legal advice. Consult with your CPA or your lawyer. We're not telling you what to do with your business. So there's that. Go ahead and utilize the chat, and we will go ahead and give you guys 10 seconds, and we'll take the first question.
I have a question.
All right, use the chat. Use the chat, Rosalie. You're gonna give me trouble here. I forgot to mute you guys. Mute all. Bam. All right, there you go. Okay, what is a tax question that you've been wanting to ask? What is an accounting question? Anything to do with money, taxes? What's the best way to incorporate my business? How should I pay my employees? How do I save money on taxes? What are some what's changed in 2025? These are all questions that you can consider. Go ahead and put them in the chat, and then we'll start asking. And let me just turn off this super annoying join leave sound. All right, question number 1. Let's see here. Okay, dang, you got a lot of questions. Everybody started talking at once. All right, we'll start with an easy one since this was one that we were just talking about before. How do you pay your employees? Do we do 1099 or W-2 or contractor? What's the best way? We will start with, here, we'll go with Ryan. If you want to unmute yourself, give a quick intro, and then let's hear from you, and then we'll go to Avery, and then we'll end with Ahmed.
Ryan Peterson. I was the one who started as a CPA, sold my CPA firm, and then was in the party rental industry. Very quick answer to that. Most people in this industry are employees. They are not 1099 subcontractors. So that would be the short answer. They more than likely are employees.
What about you, Avery?
Hey guys, Avery. I'm the one who was in the inflatable industry, switched over now to accounting, CPA level type work. Same thing what Ryan said. Your people are employees. If you're paying them to show up at your house, at your garage, at your shop, these people are your employees. Paying them hourly, you're paying them based on how long they're working. All of these really kind of fit the mold of an employee. IRS has a 12 question kind of questionnaire that you can probably just Google, just IRS employee versus contractor. And it asks kind of several questions that, if you answer yes to a good bit of these, they're employees, not contractors. If you really have that question, I'd go ahead and look into that to see, who the particular contractor or employee would be, and kind of see which mold they kind of fit.
All right. What about you, Ahmed?
All right, guys. I'm Rob Roman. I have not worked in bounce houses before, but I'm specialized in tax advisory, so I'm happy to help. I would say I agree with the gentleman. You want to know that a contractor is generally someone who a lot of times they're project based, right? You're not really paying them per hour. And many times you're not telling them what time to be there and what time to leave, right? And you definitely want to be compliant on that aspect. So I do agree with the gentleman.
And this guy in the suit is the guy that does my taxes, so that's why he's here. I'm just finding him off the street. So I did have, okay. Somebody told me this, and this is wild. Oh, sorry. Let me pause I got my. Sorry. Is there any situation where I can do 1099 legally? What if I just said, hey, I'm gonna lease you this mallet so you can hammer in the bounce house, and now you're a contractor because you're not technically using my equipment. I heard somebody that actually does that. They will lease them their truck, they will lease them their bounce houses. They were like just on paper, so they can say, hey, you've leased this equipment from me, you're officially a 1099. Is there any legal way? A lot of these guys are brand new. They don't have, they don't really know much about W-2s and all this stuff. Can they legally do 1099, or is it like, are they done if they do that? Go ahead. We'll start with you, Ahmed.
I mean, I probably would say that it does get complicated, it gets kind of sticky. I mean, if you're gonna, first of all, like you said, you're gonna have to create contracts where you're leasing the truck to them. You probably don't want to be paying them hourly, because then it gets kind of touchy there. You probably want to, if you want to legally do it, it has to be kind of project based. I think with bounce houses, it may be a little difficult to convince the IRS that this is an employee. And if I would say the other thing is, and I don't know if you guys have to do workers' comp insurance or not, but regardless whether they're W-2 or a 1099, you have to do workers' comp regardless. So, I mean, if you're looking to save on things like that, it's really not going to be the best way to do it.
What if we pay per job, like $50 per bounce house delivery or something like that?
You pay per job, and you rent the trucks, let's say, right? But like I said, there is a liability involved by doing that. And I think Ryan's been both gentlemen they've been in both positions, so they can probably answer some specifics in terms of the operations.
What you got, Ryan?
Yeah, it's just it becomes such an issue with how it's going to affect you. So, there are 20 tests that the IRS looks at, or 12 tests. I mean, depending on which one you look at. It really comes down to, if you're directing someone what to do, when to do it, these kind of things, they're using your equipment. There could be a situation where I suppose you could lease something out, but usually even if you lease that stuff out, you're still telling them where they have to be, when they have to be there. There's not really this ability for someone to sit there and show up when it's convenient for them, go deliver when it's convenient, come back and pick it up when it's convenient. And the biggest problem like companies run into, I used to deal with this when people would get audited for this kind of stuff, is you're going to get audited 2 or 3 years from right now. So the IRS, your State Department, doesn't audit you in 2025 for 2024. They audit you in 2025 for 2023. So you wind up getting hit with, most of the time, you're going to get hit with all of the back taxes, and you're going to be responsible for those along with the interest and the penalties. So it's just, you can go down that road and try to get subcontractor agreement and do it, but there's so many tests, and usually we always fail in this industry. And so you're just going to wind up paying interest, penalties, all that kind of stuff, and it's just not worth it.
Avery?
Yeah, how do the big guys do it? Okay, they pay their employees. Their employees work for them. Their employees tell people that they work for them. Not, oh, I'm a subcontractor, I work for myself, and then I just kind of subcontract with this bounce house company. No. You want your people that you're paying to tell people that, hey, I'm working for the bounce house company. I'm working for outdoor party inflatables. I'm working for froggy jumps and jumpy jumps, and those are your employees. You're usually probably paying them by the hour. Do the right thing. Years from now, they'll probably collect some Social Security, maybe some Medicare benefits because of the payroll tax that you're paying in from it. It gets such a messy situation, as Ryan said, if you're ever audited, because with that, they get ruthless. It's not just you filed too much in deductions. or maybe not, you should have had a home office, it can get messy. Be careful out there.
To me, that's honestly the best argument. I want to build this business up to be an empire, to be like the big businesses. Then I need to treat it like a business and stop treating it like a side hustle or like a job. That is the best argument to me. And you're absolutely right. Ever since we started doing that, we started getting more serious workers. People are like, hey, I work for Bounce My House. They get a W-2. They're proud. And it's not like, oh, he pays me under the table. So to me, that you treat your business like a business, others will too, your customers, your employees. So thank you, gentlemen, for that. Let's shift gears a little bit. Let's see here. What about the whole, what's the best way to incorporate your business? LLC or S-Corp, all those things that nobody really understands. What do you guys got on that? We'll start with you, Avery.
So this is a big misconception out there, and it's really probably comes from social media blowing up, the TikToks of the world. And, LLCs do not necessarily save you taxes. A lot of people say contrary. And if any of the guys on the panel have anything to say about that, I'd love to hear from them, maybe debate them a little bit. An LLC is limited liability company. What it does is limit your liability if you're ever sued. So if little Timmy goes in your jump house and he gets out a little too quickly because, mom come out with cookies or cake or something and breaks his leg, you get sued, it gets ugly. That's what the LLC is there to do, is to limit your liability. Now, get your LLC. This is a trade that does need to be, have some limited liability there. And, with that being said, you are not typically very profitable year one. Maybe a couple years down the road, you start to look at S-corporation elections. I don't really do C-corporation elections, but that down the road is really where you get into some tax savings. But just the kind of differentiation there between, limited liability or protection and tax savings. And maybe the other gentleman can kind of add to that too.
Well, before we go on to Ryan, I'm going to say what everybody else is thinking. I love your accent, bro. That's very, very different. All right, we'll go to Ryan.
Yeah, I mean, I guess to start with the base question at that point, what kind of entity should you be? I mean, the main one I would always recommend to stay away from is a sole proprietorship. And that's the easiest one to form when you first start out. So a sole proprietorship is something that it doesn't limit your liability at all. It's essentially you're personally on the hook for someone gets hurt. We got car accidents, we got bounce house injuries, things like that. So that's the one that, if you take anything away from it, don't be a sole proprietor. You can be an LLC, and an LLC is nice. I won't get too in the weeds. An LLC is nice because you can get taxed in multiple ways. You can be taxed as a sole proprietor. You can be taxed as an S-Corp. But and to go through it and become an S-Corp, that's always an option. There is a point where it makes sense from a tax standpoint. But whatever you do, just don't be a sole proprietor in this industry. You're just leaving yourself too wide open with everything that could go wrong. And then consult with a CPA. I mean, it's just something where it's going to make a huge difference, and you need to be able to have reasons for why you're doing it. So I guess that's what I would say to that.
All right, thank you, Ryan. Anna?
So I mean, to start, right, we need to just so that everybody understands the difference. We have the, as Avery mentioned, C-Corp, LLC, S-Corp, right? So the LLC and the S-Corp, both of these entities, they're considered pass-through entities. What that means is your S-Corp itself does not pay tax, right? Your tax is paid on the individual side. So it's the same thing like an LLC. The C-Corp, which I would recommend that no one ever does a C-Corp, you'll be double taxed, right? So you're going to get taxed at least 21% on the federal side. If you take out money, it'll be considered as a dividend. You're double taxed. So we're not going to do C-Corp. Between the LLC and the S-Corporation, I agree with Ryan here. You really want to consult your CPA so that they can give you, let's say, an answer according to how much you're earning. I see a lot of people jumping to the S-Corp though. The reason why they do that is they want to save on self-employment tax, right? Which is that 15.3%. So they would prefer to be an S-Corp. They can give themselves a W-2 and limit the amount of income or amount of net income they have that is subject to self-employment tax. So you probably, if again, depending on what your net income is, the S-Corp may be a good option for you solely just to save you on taxes. Now, you're probably going to pay your CPA a little bit more, but I would say that you're probably going to save more on taxes by having an S-Corp in most situations.
All right. Thank you, gentlemen. Next question. Imagine wearing a suit and tie every day. Oh, that's not a question. That was a comment. I'm just messing. Somebody actually put that in there.
It's terrible.
How does it feel, man? No, you look good. You look good. We're all jealous, but we like our t-shirts too. Yeah. Okay. Here's a big one. Deductions. So this is where I'm really excited to hear from Avery and Ryan about some unique deductions. So I know we're going to start with let's kind of start with Ryan this time around. What are some things we can deduct that maybe we're not thinking about? Obviously, we're going to deduct gas and payroll and stuff like that. What are some things, Ryan, that you found that maybe some people don't really know about?
I mean, from a deduction standpoint, I guess one of the things that you'll see on social media or whatever is paying your kids. It's something that you see it all over the place that you can pay your kids, take a deduction, your kids don't pay any tax. There is some legitimacy to that. If you wanted to do that, I'm actually doing that with our children right now, putting money away then into their Roth IRAs to do that. So there's things like that. Everyone's always very into the Augusta rule. So I don't know if people are familiar with that, but essentially it was a rule made for the Masters tournament down in Georgia. And so they allowed people to rent out your house for up to 14 days. The business, and you would not have to pick up the income on the renting of your house. And so business owners have really, social media wise and everything else, have capitalized on that to say, well, we could rent out our house for a shareholder meeting, a client meeting, take the deduction through the business, take the deduction through the business, wind up having income on your return and then not having to pay any tax on that income. So things of that nature, you get the depreciation, which is 179, and accelerated depreciation. You can look at, buying the equipment and writing it off in a quick fashion. So you don't have to depreciate it over multiple years. You can depreciate it all at once if needed, depending on your tax situation. So you're always gonna have to look at that. So those are a couple at that point. I'll let the other folks answer it also.
Wow, you just dropped a couple bombs, bro. Like, do what? Avery?
Yeah, good stuff. And I second a lot of that. Really, I think a lot of times when people start thinking about taxes is they look for magic. I don't know if anybody runs a circus, but I don't know that magic exists. I don't know. It kind of looks like it may be, and then I can't figure it out. I think in maximizing your deductions, I think it's best to have just a robust bookkeeping system that really tracks where your expenses are, because that's really the best expense and the best deduction that you can take is the one that you legitimately have any day of the week. Now we can talk about paying the kids, or maybe not, they're cleaning it, and we can put money in retirement accounts, but I'm talking about the everyday type stuff. And just as a CPA in a firm, I've just seen so many clients come in with small businesses and such that they don't have a good bookkeeping system for whatever reason. Maybe it costs a little bit, maybe they don't see it necessary, and they just miss out on the deductions that they do have that they could use and really have tax savings for. So I think investing in a good bookkeeping system that keeps up with your legitimate expenses and all is the first step to do. And then get a CPA. I'm available. And we can go down the route and talk about those other things as well.
All right, Amit.
Great. Ryan mentioned a lot of really good things. I think what Avery just mentioned right now is actually very, very important. I find that a lot of clients, they don't know how much expenses they have, right? And if they don't have a proper accounting platform, let's say, I heard somebody or I read somebody said QuickBooks or no. Yes, definitely. You definitely want to have a QuickBooks file. It's not that expensive, right? There are other options too. There's Zero. You can even use an Excel sheet, but you really want to have a proper accounting software. You want to reconcile, right? I mean, Avery will tell you more. I'm not going to reconciling, but you want to make sure that your books are correct. You want to make sure your expenses are correct. Now, besides that, there are changes in the tax law, right? So I know Ryan mentioned depreciation, right? Depreciation, a lot of you, when we say depreciation, they think about maybe their vehicles or other, maybe equipment, right? That's changing here in 24. It used to be where you could take 100% of your vehicle. You can't do that anymore, right? If you depreciate your vehicle, even if it weighs 6,000 pounds, even if it's a large van, you're only going to be able to take 60% in 2024. In 25, that's changing to 40%, right? 26, we're expecting it to be at like 20. So make sure you ask your CPA these questions so you stay up to date. And you don't expect to have this massive tax deduction because you bought a truck, and then you find out that you can only deduct 40% of it by the end of the year, right? And I would say that besides that, you need to know there are unique expenses that you can take advantage of. All of you probably have a home office, right? We know Tariq does. Everybody has a home office. You could probably write off your home office as well. So that's another thing that I would consider for anyone that owns a bounce house business.
Wow, I think you guys are giving us all anxiety. How do we hire you guys to do all this for us? Sheesh. Okay, next question. Well, okay, what is a good bookkeeping software? And with that, all right, like 3 questions. What's a good bookkeeping software? Should we hire a CPA? And how much should we pay for a CPA? Or is having a CPA a ripoff if you have QuickBooks? Go ahead, Adam.
Okay, well, it's definitely not a ripoff. I'd say that much. But I mean, that's a great question actually, because a lot of people think that if they have QuickBooks or if they have an accounting platform, they think that's enough. I don't need an accountant. I don't need somebody that goes through my books whatsoever. And that's a misconception. You really need someone to look through your books, right? Obviously, it depends on how much you're earning. It depends on how, like if you're hiring a CPA, do I need to meet with them once a month? Do I need to meet with them once a year, right? And that just depends on your revenue. So I would say definitely to have a relationship for you to go back and ask questions, because a lot of times, let's say your CPA, I'm just throwing a number here, let's say they bill you $2,000 annually, right? When we look at your tax liability, more times than not, they're saving you double or triple that through finding different ways, different methods of you saving on taxes, telling you how your business is doing. Sometimes you have money in and money out. You have no idea how much you're making. You have no idea what you're spending on, right? So maybe you're spending too much on advertising. You're spending too little. You need to be able to compare different months. So they can bring you value, grow your business, at the same time save you money on taxes, right? I see the smile, Tariq, so I know.
You know what I'm thinking about? I'm thinking about when this man texted me, and he's like, "What's Andy's? I see a lot of Andy's on your Andy's is like an ice cream shop around here." He's like, "What's Andy's? Why you guys always have expensive from Andy's?" I'm like, "Dang, if my CPA is asking me what's Andy's, then my kids are definitely having way too much ice cream and billing it to the wrong card too." All right, thank you. And I just got to say, just to piggyback off that, this man right here, and it was expensive when I started working with a CPA. It was a lot of money, and it's not cheap. But during COVID, when everything was falling apart, we got a $40,000 grant, not a loan, thanks to having Amr here as our CPA. He notified us. He's like, "Hey, there's these grants. I think you qualify." We did not qualify for the what is it called? PP whatever loans, because we were not doing W-2. So that kind of bit us in the butt because we were doing 1099. But we did qualify for a grant of $40,000 that we never had to pay back. And he even helped me fill out the forms because God knows I wouldn't know how to fill it out. So that in itself, I don't think in 20 years I'll have paid him $40,000 in fees, or 50 years. So that in itself was a huge thing. That's just a testament, even though he's not taking clients, but Avery is. So that's a testament of just having somebody for those emergency situations. We'll go with you, Avery. What are your thoughts What's a good booking software? Do you need a CPA, and how much does a CPA cost?
Yeah, so great questions. So I use QuickBooks. It's clean, it's easy, it's popular. A lot of people use it. And actually, I'm just now putting in the chat. I have a QuickBooks referral. If there's anyone that doesn't have it and think they need it, you can click that link there, get it set up. It's 30% off for I think 6 months. It's a better promo than what QuickBooks has. I think they have 50% for maybe 3 months. So it's a little bit better promotion if you need it, little discount there. To answer the question, do I need a CPA? Yes, you do. Just untold reasons, they go on and on. You know, how much do they charge? It all depends based on experience. It's going to depend based on your situation. Could your CPA be ripping you off? Well, if you think you're overpaying your taxes, he might be ripping you off. And it might not be because he's billing you a high amount or not. It could be that, you know, he's not helping you in these other ways and helping you get these tax deductions and maybe some credits out there and helping you minimize taxes, build long-term wealth, you know, grow your company in all these different ways that a financial professional would be able to do so. So I guess to kind of answer all of them, yes, yes, yes. I'll go to Ryan.
Yeah, so I completely agree. We've used QuickBooks. All of my clients in the past have used QuickBooks. It used to be QuickBooks Desktop, so that's an option. I've used QuickBooks Online. I like it because it's able to be synced up to our booking platform, and I think all 3 major booking platforms have the sync option. So I try to make it so I have to do as little as possible, and it just works out. When an order comes in, goes through our booking software, it automatically goes over to our QuickBooks Online. So that's why I like QuickBooks Online. It also allows you to have a login, plus you know, your CPA, your bookkeeper to have a login, so you can all be in the same file and you don't have to physically transfer it back and forth. Do you need a CPA? I would say yes. You know, my caveat to that is, like, your CPA needs to do the right thing, because there's a really big difference between a tax preparer, which is looking backwards, hey, what happened last year, and actually a tax planner. And that's what you need to be looking for. We can all get our taxes done by a tax preparer, but it's that integral part of looking forward. What's going to happen this year? How can we help you integrate that to make sure that you're getting the best possible solution? So that would be what I would say, is if you're looking for someone, don't just get a tax preparer that's looking backwards to file your taxes from last year. Look forwards and someone that's going to plan with you and help you out. Like Tariq said, maybe it was a grant, maybe it was the PPP loan, like different things like that, that you as a small business owner might not have any idea about. That's what you should pay your CPA for.
Wow, I love how you said that. Doing your taxes is looking back, having a CPA is looking forward. What's and I mean, this might be a little, well, like what's a good rate? Like, I know you guys kind of all dodged that question. What's a good rate to pay a CPA? How do I know if I'm getting, you know, like, what's fair? Look, they're all quiet.
No, so I'm just trying to charge as much as everybody who rents out these bounce houses. So maybe if I can get to that level, I'll be good.
I mean, I can tell you what, you know, when I used to not have my own firm, working at a CPA firm was like a 50-person CPA firm. I think our average rate for a tax return, federal, state, business tax return, was probably in the neighborhood of about $3,500 to $4,000.
Holy.
So you can find, you know, if you have a firm that doesn't have 40, 50 people, so you find a firm that has 5 to 10 people, so you still have enough people to, you know, that are there to help you. I mean, I think we were charging, when I worked at a firm, 5 to 10 people, somewhere in the neighborhood about $1,000 to $1,500 for a tax return. So it really depends on the firm and you know, how many people are there, what kind of level of service you're getting. So rough estimate.
Yeah, it's also
definitely.
going to go ahead.
Go ahead.
You're good. Go ahead.
Thank you. No, I definitely agree. I think you definitely should not be paying $3,500 or even close to that to do a tax return. I agree with Brian that if you do go to a larger firm, you're going to pay more, right? So you probably want to work with a firm that's a little smaller. You're probably going to get more attention, right? Or better attention, better service, and you're going to pay less, right? So that's something that I would keep in mind. You know, to say how much you're going to pay, honestly, it just really depends, because you know, you may be one of the one of the clients that comes in with a shoebox full of receipts, right? And I'm going to spend 6 hours just going through your receipts. Yeah, you're going to pay more than the guy that comes that's very organized and maybe is having monthly services, right? So it just really depends on you as a client, how organized you are, how much time it takes to work on your business, and how much money you're making.
All right. Well, still didn't get a straight answer, but at least we know it's not $35,000.
Yeah. So here's my answer.
Somebody said they're paying $85 an hour. I mean, I don't know.
That's a little on the cheap side. That's a little on the cheap side.
You're taking clients, right, Avery? Like, what's the ball?
That's right. So I've recently had a client, had some cleanup work to do. I'm billing them $100 an hour, and that's to clean up. Now, 3 years from now, I'm hoping to be about $250 an hour. So, it kind of depends where the CPA is at. It's going to depend on your location. Miami is a lot more expensive place than, you're anywhere small town America. And so, but I will say this, mess around and find a CPA and let them charge you $1,000 a month, $12,000 a year. See what they can do for you. It's not the first time that you've wasted some money, and just kind of figure out from there. If you can justify the $12,000 a year, then keep paying it. If not, find somebody else.
Is there any like monthly CPAs out there where you could just pay a monthly thing where they could just like reconcile your books and like with Quickbooks and stuff like that, where it's not like you have like a team maybe working on it, not necessarily you? Is that something you offer?
Yeah, of course. Yeah.
Okay. All right. Well, we'll get Avery's info if you want. You can put it in the chat, Avery. If anybody wants to reach out to you, we will definitely. And Avery's definitely going to be a ton of wealth, especially being in the industry. And if we can support one of our own, why the heck not, right? And anybody who's not $3,500 a month, why not? With that, let's talk about receipts. Do we even need receipts if we're doing QuickBooks? Like, why would anybody like? What's the story behind that? Go ahead, Ahmed. I see you smiling.
Well, I would say majority of people, they're using their credit card, they're using their debit card, right? I mean, as a business owner, you should pay off your credit card, but I would say you should probably have a business credit card. Probably take advantage of some cash back. You take advantage of some points if you travel or anything like that. So if you're putting all your expenses on that business credit card, that transaction to the IRS essentially is a receipt. Now, depending on where you go, if I'm buying something from Walmart, right, and I could buy all sorts of things, then I probably need a receipt so that I need to know like what is a business deduction, what is not, right? But if I'm buying like, let's say something that's very clearly for my business, I can just use the credit card, and I think that's sufficient as a receipt. I mean, I'm one of the firms that doesn't really, we're paperless, right? So I really don't want to be holding a boxes of receipts, keeping them in storage. And I don't think any of you either.
Avery?
Yeah, so I think I got lost in listening. Can you repeat that question? Receipts, right?
Receipts, yeah.
Yeah, so, they're really not important until it comes time that you are audited. And by then it's too late. And, it sort of depends how, what you're getting audited for. I've seen IRS audits where, they request bank statements to back up particular transactions. They want to see that the money did come out of the account and, it was for a fact paid. Then I've also seen some that, request a receipt on, some transactions that could kind of look personal. And so, it's always best to keep receipts. What's the best way to do it? Scan it. I had a little bitty scanner I just plug into my computer. It scans it fine, puts it on there. It was like $100. It's always best to have more records than less. So I just kind of rest my case on that.
All right, Ryan?
Yeah, I mean, from my past, we did multiple audits before, and so I would agree with Avery to have the receipt, because people often think like, well, I went to the gas station and I filled up with gas, but I mean, even on your credit card statement, all it says is the name of the the gas company where you filled up at. I just be honest, many people go in, they grab a soda, they grab something to eat, things like that. So that's why the IRS wants to see receipts, because it's not clear cut. They can't just look at your credit card statement and say you bought gas here. They're going to want to see those. And so those are the number one things that get thrown out. I mean, honestly, whenever I went through an audit with clients, gas receipts, operating supplies, things like that, you wind up at Menards, Home Depot, what'd you buy? Let's take a look. Give me the receipt so we can see the breakdown of what it is. As far as how to do it, yeah, I would agree. If you could scan it in, I mean, QuickBooks Online offers a way you can just take a picture of it and it uploads right to the actual service. And if you get audited, you can print them all out or forward them on to the auditor at that point. So yeah, absolutely, you should definitely keep your receipts.
All right. Let's talk about vehicles a little bit. Is there really a difference between like a personal vehicle and a like it's a little tricky. I don't even know, like I'm not sure what the question is, but do you have to like register the vehicle in your business or anything like that? Go ahead, Avery. See you looking.
So there's a lot of gray area there. Maybe if it was done absolutely right, if you were using that vehicle 100% business, your business would have it in the business name. And then, it would be paying all the operating costs. It would be paying, if you financed, it would be paying on the loan, interest, all these type things. Now, again, 100% right. If the business vehicle is not in the name, it's always kind of better to reimburse to the owner of that vehicle, usually a shareholder, possibly mileage. And all this kind of depends on what entity you are. S-Corporation and a corporation is going to be different than a LLC sole proprietorship. So again, kind of talk with a CPA a little bit more than that. But there's two ways of doing it. There's mileage, there's actual. It's very gray, just in terms of if you were audited, what's the outcome going to be. It's always best to go the further step and do it mostly right way. Again, get with a CPA on it. But I've also seen auditors, here's the fuel cost. Yeah, the vehicle might be in the personal name, but it's reasonable that we should have vehicle expenses. I'm gonna let it pass. So there's a bit gray. Get with a CPA.
Ryan, do you suggest buying like a Tesla truck for your business or what?
No, I do not suggest buying a Tesla truck for your business ever. Where people get tripped up with this is Avery hit on it. There's two ways to take a deduction with your vehicle. So one of the ways is mileage, and so for every business mile you drive, you get a certain amount for every mile you drive. The other way is actual expenses. So you think about your actual expenses, your gas, your insurance, your repairs, things like that. What I've seen in my history with clients is people always like to go with the actual expenses because you get to write off the vehicle, you get to take depreciation on your vehicle. What they often miss is that you still have to track your miles on that business vehicle. And so people think, hey, I'm just going to do the actual miles. I don't need to keep track or the actual expenses. I don't need to keep track of my miles anymore. And that is not the case. And so it's just one of those things that people get confused upon. And that's where we've seen a lot of confusion out there. So just making sure that whatever you choose, whether it's mileage rate or it's actual expenses, you keep track of your miles. There's another rule too. I don't know if it applies to anybody. We have 9 trucks and trailers. Once you get over 5, you can no longer use mileage at that point in time. You have to use actual expenses. So just a couple of things to keep in mind that way.
Good problem to have. Congrats. 9 trucks. What you got, Ivan?
I agree with John. I mean, honestly, the keeping mileage, keeping a mileage tracker or having, I think even QuickBooks has a mileage tracker that you can use, because most likely you're using your business, vehicle also for personal things sometimes. So what's going to happen is you want to make sure you keep track of that mileage log. If you're putting all the actual expenses, let's say you have repairs and all types of expenses, let's say it's 80% business and 20% personal, you'll be able to deduct 80% of those expenses, right? So I would say to keep track of the expenses, at the same time do mileage. This way you're able to kind of present the full picture to your CPA.
And that first year, you get your options. So you get to make, with each vehicle you have, you get to choose which option you want to do. You know, if you go actual expenses, you have to stick with it. If you go mileage, you can make an adjustment in future years. But yeah, keeping both is going to be the way to go, just to make sure you know where you're at.
Good stuff. I mean, like every question they're answering, I'm getting more questions, right, guys? It just goes down the rabbit hole, and really that's why I think it's good to have a CPA. In fact, shameless plug, we're in Tariq's Bounce House School book in chapter 10. I recommend building your dream team, and with that, you basically make a list of your electrician, your CPA, your lawyer. These things are going to come up. I had a lady tell me, if you don't send an electrician to my house right now, I'm gonna have somebody come out and I'm gonna send you the bill just because her breaker tripped. Like, lady, you don't know how to, you know. But fortunately, I had somebody I could, you know, or anything like that, or a lawyer, you know. So I think this is really important to have a list, have somebody, because there's no way we're gonna answer all the questions today. You're gonna have something that's unique to your situation, that's unique to your state, and you know, there's only so much. So I think definitely it's worth it, especially. Like there's a quote actually in the book that if you think compliance is expensive, try non-compliance. I was like, dang, like that's good, man. And I fall for that every time. So I think that's really important. But like Avery said, you have to find somebody who you're comfortable with, somebody who kind of aligns with you. Well, with that, let's talk about sales tax a little bit. Is that the same across all states? Should we be charging sales tax for rentals? Do we pay that to this? How does that work as far as sales tax?
It's not the same across all states at all. And so that is a very state-specific issue. I can tell you, I'm in Minnesota. We pay sales tax. We have a different rate for each county that we visit, sometimes for each city that we visit. So it's not very uniform, which makes it difficult as far as that goes. Yeah, because I know like places, you know, I used to have clients in California who I believe they said do not pay sales tax in California on rentals, but I believe a lot of other places do. So,
Ivan?
Yeah, I would say one of the first advice that I give a lot of my clients, sales tax a lot of times actually more important for you to be compliant on than income tax, than everything else. And the reason why is because especially if you're collecting sales tax and you're neglecting to file the sales tax returns, because then the state knows that you're collecting all this money, right? And you're collecting sales tax from your customers, but you're just not paying it, right? So in this case, to them, you're almost directly stealing from the government, right? So it's something that is very, very serious. And these, you know, liens, levies, like right and left, right? So you got to just be very, very careful. You have to know if you're filing monthly. Sometimes they change, right? If your income goes up, or not income goes up, if the sales tax amount goes up, then it can go from annual to quarterly to monthly. I'm speaking at least in Illinois. I'm sure other states are very similar. So you got to make sure that you're very compliant in terms of sales tax. You have to have really good books. You got to keep, you know, your receipts need to state clearly which portion of, you know, of your invoice is sales tax, right? And that's what I would recommend for everyone.
Good stuff, man. Avery?
Yeah. So very state specific. Here in Alabama, there's actually a rental tax. So they're getting you with the definition anyway. So it's, according to the county, according to the city, 4% usually always goes to the state. Sales tax is different. If you're selling, I don't know, I can't even think the mix that goes in the snow cone maker or your cotton candy maker, you're actually selling that. Well, that may be even subject to a sales tax. And so, again, to the point that state agencies do get ugly quicker than the IRS does. To both of their points a little bit back. If you really want to get a good answer on it, contact your state Department of Revenue and ask the question. Give them the scenario. I'm in the event rental business. I have some water slides and bounce houses that I rent out. Do I owe a rental tax? Do I owe a sales tax? Call them 3 or 4 times. You may get 2 answers, but hopefully one of the 2 answers you'll get it 3 times instead of 1. And really, that's kind of you have to kind of do the best that you can, and maybe even get a CPA again, to really nail that down for you.
Well, and if you're going to do that, I completely agree. If you're going to call your Department of Revenue, I would almost, what I always recommended was email them. So when you're emailing them to get an email response back, that way if something's wrong and you do get incorrect advice, you have something to go back to say, hey, this is why I did what I did. It's not going to probably get you, it won't get you out of any tax, but it really can help you out come penalty time if you made a mistake, to say, I relied on the information from this Department of Revenue to do it. Avery's absolutely right. When you get audited, very rarely it's going to be from the federal government. More often than not, it's going to be from your local Department of Revenue, from your state, and more often than not, it is your sales tax that you wind up getting audited for. So at that, and then further at that point, use a system to help you. There's TaxCloud out there. QuickBooks Online does the same thing. You can sign up, they'll calculate your sales tax for you. You can print off a sales tax report. It'll show you what you should file. Use all your resources at that point, because it does. I can tell you from Minnesota, it is incredibly difficult with as many different tax rates as we have, and I'm assuming it's the same throughout the country.
All right, I'm gonna try to get in. We'll do rapid fire real quick. 10 minutes left. Paying yourself. How do we pay ourselves? What's the best way to do it? Should we do it, or should we just take, like what we all do, take all the money and buy more inflatables with it? Go ahead. We'll start with Avery.
It's going to depend on your entity. Sole proprietorship's different than a partnership. Partnership's different than an S corporation. Depends on your entity. Contact the CPA.
Okay. Avery, or sorry, we'll go with Amber.
Yes, agreed. I think it really does depend on your entity. So if you're an S corporation, you're paying yourself, you have to issue yourself a W-2, right? If you're a sole prop, you're a single member LLC, then you could just take a distribution. You can take distribution as well with an S-Corp, but one of the things that you have to be careful with the S-Corp is if you're you need, and that's again why you need someone like Avery's, because you need someone to calculate your basis for you. You need to know that you're not distributing to yourself more than your equity in the business, because then that can also result in additional taxable income, right? So paying yourself a distribution is, again, if you're an LLC or an S corporation, it's not the biggest deal. I would say go ahead and do that. If you're a single member LLC, it's pretty straightforward. You can take whatever money you need to. Again, this is for tax purposes, not for running your business. You gotta be careful what you pay yourself.
All right, thank you. Ryan?
Agree. I'll just agree with what they both said.
All right, thank you. Let's talk about tax exempt. When somebody says they're tax exempt, do we need them to provide some kind of form, or how do we handle that? Quick answer. We'll go with Ahmed first.
Yes, definitely. You definitely. I mean, and again, this is back to state tax, right? So, you need to make sure if somebody says they're tax exempt, they're providing you a form, right? And it's going to be different forms for different states, but you have to make sure that you have their sales tax ID, or if they're tax exempt, they have a certificate, and you need to make sure you keep that on record, right? Just them sending you an email saying I'm tax exempt is not sufficient.
So I have to give you the number. Ryan?
Yeah, completely agree. Each state's going to have a different form. Just make sure you have it, because that's exactly when you get audited what they're going to request. They're going to request that sales tax exemption form. Make sure it's filled out correctly. That's what you're looking for.
Avery?
I agree to both. Yeah. Very
Right.
state specific. Just kind of see what you need for your state.
And I think it's just more and more is becoming clear. We should really, and I'm not getting paid by any of these gentlemen, by the way, but just having a CPA, just a lot of anxiety, a lot of, I mean, I text Amber all the time. My wife, actually, she's like, I'm like, just text him, just ask him, because I don't know. I don't want to learn this stuff. I don't care. Just ask him if we should, put the popsicles that we bought for the guys on the Quickbooks or not. I'm not, don't make it a big deal. And with that, somebody asked, filing your taxes, should we do it like the TurboTax online? What's the best way to do that? I think we kind of answered that throughout the whole thing. Go ahead, Avery.
Call me, I'll file them for you. I'll charge you a lot. If you know what you're doing, use TurboTax, or hire another CPA.
All right, Ryan.
Yeah, I mean, TurboTax is fine. It is what it is. It's a video game as you watch your refund go up or down up in the corner. So is what it is.
Is there any, I mean, what about the liability? Like, you can lie on like I try to push my luck all the time with Amit, and he's like, bro, you can't claim that, man. So it's good to have somebody like that. That's my fear with TurboTax. It's just gonna, yeah, sure, yeah, great job. Here's more money, and then TurboTax isn't gonna bail me out when I'm getting audited.
To be fair, it doesn't, whether you hire somebody or not, you're ultimately responsible for it. So you have to know what you're doing. If you use TurboTax, great. It is what it is.
All right, Amit.
I would say just be careful. I mean, if you're going to use something like TurboTax or any of these softwares, yes, you're going to pay less, right? But again, going back to what we spoke about originally, you need advice, right? And that advice is priceless, right? And I think that's the main reason why people, you're not talking to a CPA firm just so that they can plug the numbers in and tell you, oh, okay, you can deduct this and that. The reason why you're going is so that they can maybe give you some advice. You can find a legal way to save on your taxes instead of beefing up the numbers sometimes, right?
Ahmed, what about workers' compensation? Something we haven't talked about. Is that required? What is that? And what can you tell us about it?
Yeah. So workers' comp, essentially it's insurance to make sure that if any of your guys get hurt on the job, right, they'll be covered. They're not coming after you or anything like that. It is definitely, at least in Illinois, it's definitely a requirement, right? And I'm assuming it is probably nationwide. And for those of you who will still have 1099s, it doesn't matter if there are contractors or W-2s, you still have to have workers' comp for everyone. And the one thing that I will say, if you are, or once you get this workers' comp insurance, be very careful. A lot of people, when they receive this really low rate on workers' comp, because maybe they're underestimated how much money they're going to make, or they underestimated how many employees they have. At the end, sometimes, they're annually, they have this annual audit that they do for you, right? And after this audit, a lot of people end up paying like $10,000 or $5,000. At that point, you're like, man, I wish I would have paid it monthly and not, get hit with it all at the end of the year. So I would just say maybe overestimate a little bit on the income, overestimate a little bit on the employees, or be more realistic so that, yes, your rate is going to be a little bit higher, but you're going to save yourself the trouble at the end of the year.
Ryan?
Yeah, for Minnesota, we have to have workers' comp. And so, yeah, I agree with everything you just said. Like, you're going to have an audit at the end. Just make sure you're ready for it. If you overestimate, usually if you have an audit at the end and you overestimate, they'll refund either a portion or the whole thing of it. So just, if you can't budget your money very well, you probably don't want to get hit with that $5,000 or $10,000 bill at the end.
Funny question. I had a guy get bit by a dog. Is that covered under workers' comp while he was setting
Yes.
up? It is? Okay,
Yes.
good. Unfortunately, he didn't go to the hospital or anything, but Two guys get bit by dogs, actually. I don't know what it is by dogs. Setting up a bounce house. Avery. And they were both scared of dogs. So I was like, you probably did it to yourself. Avery, workers' comp.
Yeah, so if I'm right, it is a little bit state specific in that as well. Some states may require less employees before you have to have it. Some may be higher. You know, kind of just saying the same thing that they said. You know, in everything that they said.
All right. Well, I think we answered all the questions. This is a little more specific one, but we have like a minute for Sue Chastain here. As far as taxes, when you charge tax, does that have to be like specifically on the rental? What about like the other fees, like the labor, delivery, all that stuff? What can you guys tell us about that, Avery?
State specific. For Alabama, it's gross receipts. So that's going to include the mileage. That's going to include all the other fees you tack on there. Maybe for a sales tax, in other states, it could be different. Again, it's just very state specific. And so, you know, it could be different depending on wherever you're at.
Right.
Yeah, same deal for Minnesota. If the what you're providing is taxable, so like the rental equipment is taxable, then everything else is taxable to go along with it. So yeah, it's definitely something you should check with your Department of Revenue on.
Adam?
I agree with you guys.
I have one question that I've actually wondered about since I was a kid, and somebody actually asked it. If I pay taxes on something when I buy it, why do I have to pay tax again when I sell? Like, how does that work? It just feels like we're being taxed 4 times on the same thing. I've seen a post about it, like when you buy something, then when you sell it, then when you use it, like it's crazy. Is there some legitimacy to that, or are we just all idiots? Go ahead. I don't know. They're all laughing. Like, who's gonna go first? Go ahead, Ryan.
Well, I mean, for our industry at that point, what you should, you know, for Minnesota, and I'm assuming it's like this for many states at that point, if you're charging sales tax, for us, when we buy a piece of equipment from a vendor, we don't pay sales tax up front. So in Minnesota, it's always the end user who does it. So when I go buy a bounce house, I don't pay sales tax on it. When I get it and I rent it out, I pay sales tax on it then. Or I should say I collect sales tax from the customer and remit it then. So hopefully we're not paying tax all the time, but yeah, I mean, essentially, yeah, you're taxed here and there and everywhere.
Ivan?
I would say just one thing to that. I would say one, when you're buying your equipment sometimes, or anything kind of, let's say that you're going to be either selling or you're going to be renting out, just make sure that you have your sales tax certificate, right, or reseller certificate, whatever it is, so that you're providing that to the wholesaler, the vendor, whoever they are, so that you're not paying sales tax upfront, right? And because
But
you
then
will
you
be
still pay
collecting
income tax. So like I pay tax when I bought it, and then when I pay income tax again. Like you can't deduct the tax that you paid. That's just
you can deduct, yeah, you can, if you pay sales tax, you can deduct the sales tax that you have, right? But it's not, again, it's not a credit, it's a deduction, which kind of, we can get into that, but that's, well, yeah, I mean, eventually, essentially, Tariq, I think what you're getting at is, yes, there are a lot of taxes that you pay.
yeah, it's a lot
Right.
of taxes, man. What are you guys gonna do about it? They're like, hey, man, we're just like you, Avery.
Yeah, so really, you know, how is this allowed to happen? It's because you keep voting for these politicians. You know, you keep allowing it. That's right. Grab your pitchforks. But you know, there's a lot of tax and stuff out there. You know, we as business owners need to educate ourselves in as much area as we can. There's a premise out there that, you know, taxes generally is your number one expense over your lifetime. You know, get around people who try to reduce this for you, and maybe you won't have to work as hard.
All right, wise words, wise words. Thank you all. I'm putting Avery's information here. He is currently taking clients. Once we end the Zoom, it will shut down. So go ahead and take a screenshot. Guys, thank you guys all so much for joining. Thank you to our co-hosts here, for Ahmed, for Ryan, and Avery. You guys have been awesome. I don't know about you guys. Give me a round of applause, everybody. Seriously, let me know in the comments if we should do this again, if you guys really enjoyed this. You guys are getting lots of Lots of Amanda here is giving an extra round of applause. Good seeing you, Amanda. This has been really, really good. I learned a lot. It's so easy to forget this stuff, over the course of the year. So thank you guys. We're getting a lot of praise here in the comments. Enjoy the rest of your evening, guys. Don't forget to do your taxes, and we will see you guys same time next week. Have a good night.